We're in crazy times. There's been a ton of talk recently, so you're probably wondering whether the stock market's going to crash, when the stock market's going to crash. Good questions. Hey guys, Jessica here. So today I'm going to be talking about whether or not we're in a bubble, about what the market is telling us. But the even more important question to be asking is, am I prepared for whatever happens? So I'm going to talk about that as well, about things that you can be doing to make sure that your portfolio is in good shape. So jumping into it, are we in a bubble? I'm not going to lie, stock prices are pretty crazy high right now. One of the biggest indicators of bubbles is something called a PE ratio, or price to earnings ratio. And it's basically a measure of how expensive stocks are. I'm going to share my screen super quickly. All right, so check out this chart here. This is the Shiller PE ratio, which is named after Robert Shiller, who's a Nobel Prize winning economist, and it's basically a really good measure of whether stocks are overvalued or undervalued. And you can kind of see like very clear peaks here. So this is 1929, right before the Great Depression. This peak was 1999, right before the tech bubble burst, and this is where we are today. So Warren Buffett has an amazing quote that it's a good idea for investors to be fearful when others are greedy and greedy when others are fearful. So what do you guys think? Do you think people right now outside are fearful or greedy? Obviously, we can't predict the future, despite the number of people out there claiming they can. The only thing we do know for sure right now is that PE ratios are pretty high. But whether that means that the stock market is coming down tomorrow or it's going to keep going up for another 5 years before it comes down, it's really hard to say. So what can we do about it? If we can't time the market, if we don't know if the market's coming down tomorrow or in 5 years, what are some things that we can do to make sure that we're still getting the most returns that we can, given that uncertainty? So let's start first with the things that you should not be doing. The first thing that you should not do is take all of your money out of the market and store it in cash. You might be thinking that, hey, we're in a bubble, so I'm going to try to time that peak and pull all of my money out before the market comes crashing down. But the thing is, as mentioned, it's pretty impossible to time the market. People have been claiming that we're in a bubble since 2017. And if you had pulled out your money in 2017, you would have missed out on one of the biggest bull runs in the history of stock markets. And just imagine, if the market continues to go up for another 5 years, just how much in gains that you would be missing out if you pulled out now. On top of that, you've probably heard that we're seeing pretty high inflation right now, some of the highest inflation rates in the last 30 years. And the thing is, if you were to pull your money out of the stock market right now, in addition to missing out on potential gains, you'd also just basically be losing value because while you're sitting on this cash, prices outside are going up and up and up. And so if you're curious more about inflation, we did a separate video about this, so you can check that out. I'll link to that up here. The second thing you shouldn't do, don't put all of your eggs in one basket. Diversify. This is probably the single biggest thing that you could be doing with your portfolio to make sure that you're getting the highest returns for the lowest amount of risk. And whatever it is that floats your boat, stocks, gold, crypto, real estate, bonds, whatever, make sure that you have a good mix between these different kinds of asset classes, even within the asset classes, making sure that you have a good mix of different types of investments. So at least 20 different types of investments, and ideally speaking, a lot more than that. The risk, if you don't do this, is imagine you put a ton of money into a single stock, into a single company. And even if, the market is great and the company is great, there's always the risk that this company might go bankrupt. And it's really hard to predict. And that's all of your savings gone if that happens. In fact, I know somebody that this happened to. So basically, this person used to work at Lehman Brothers before the housing market crisis in 2008. And as an employee of Lehman, he had a ton of Lehman shares. And he happened to be on vacation, I think on the other side of the world, basically, when Lehman Brothers went bankrupt. And Lehman Brothers went down over the course of a weekend. By the time that he resurfaced, all of his shares were wiped. So the point is, you want to make sure to be spreading your investments across a lot of different assets, a lot of different companies, a lot of different sectors. And one of the really easy ways to do this without too much manual effort is to look into things called total market ETFs. Exchange traded funds. You could also look into things called robo investment companies like Wealthfront or Betterment. I'll link to both of these companies below. But basically, these are pretty low cost services that will diversify your portfolio and implement a lot of other sort of investment best practices along the way. Which brings me to my next point, which is if you're concerned about a bubble, one of the things you could do with your portfolio is to skew it slightly safer, which means that, as an example, you could take some Tesla stock that you own and swap it for bonds or even government bonds, which are the safest investments out there. By the way, the US government is currently offering over 7% interest on Series I savings bonds. So definitely check that out. I'll link to that in the description below as well. See if it makes sense for you. Other than that, a couple more practical things that you could be doing to make sure that you're prepared and also maxing out your investment returns. The first thing is to make sure that you have an emergency fund. I won't go too much into this because we did a separate video about that, so I'll link to that up here as well. But I just wanted to mention it again because having that emergency fund is super key, both in terms of helping you weather a potential crash, but also in terms of keeping your investment returns high over the long term. And the way this works is that by having an emergency fund, you don't have to pull money out of the market, out of your investments at exactly the wrong time, basically when the market's at the bottom. And by keeping your money invested, it allows you to keep returns up. And so if you want more detail about, how all of that works, definitely check out the video I mentioned. And lastly, if you have debt, student loans, credit card debt, whatever it is, try to reduce your debt as much as possible. Paying off debt is always a good idea, obviously, but it's even more important when there's a lot of uncertainty in terms of where the market is going. And the reason behind this is similar to the emergency fund one, in the sense that you don't want a scenario where, say, a recession pushes you into a rough patch and you have trouble making a payment or needing to pull money out of the market at exactly the wrong time. And that's it. As always, would love to hear from you guys. Do you think we're in a bubble? What are things that you're doing to prepare? Let us know in the comments. And also wanted to say, this is a video about investing, so there are risks involved, which means that whatever it is that you do, make sure that it's something that you're comfortable with. Ultimately speaking, that's the most important thing in investing. Also, if you'd like more support with personal finances, definitely sign up for Uprise. The link's in the description below as well. We design Wall Street level personalized financial plans completely and 100% for free. So if you're feeling stressed about paying down student loans, investing, saving for retirement, whatever it is, definitely check us out. We're happy to help. And on average, we've put $100,000 back into customers' pockets. Other than that, if you'd like to see more videos like this one, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. See you guys next time.